Yeah,
Look at this thing.
yeah. Too up, too down.
Look at this
Hey,
thing. Got
yeah.
money.
Yeah, I wanted the crown and to be celebrated. I rented a tux and I ordered a mink. Stood in the mirror like mama, I made it. Proceeded to brush in the teeth in the sink. Caught me a grill and I'm so melanated. I polished the chain, I ain't gold in the link. And I got me a baby who gave me some babies. I'm raising a lady and building a king. Too cold. You too busy running with another man lane, I guess. Yeah, too bold. I be running on the one way, never change my set. Like, I don't ever use my signals. Yeah, I be in the lane myself. Yeah, I don't gotta change my mental. Yeah. And I ain't gotta chase my wealth, and I accept my daddy got a kingdom, and everything I ever got is his. If I ever got a problem, I'ma seek him. I never doubt him. Been about his biz, oh man. Been there. I ain't gotta ride on the wave when the ocean is his. Close with the kid with a
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, y'all? It's your partners Dale and Cliff back in the saddle again for another Real Estate Friday live on Friday at 5 p.m. Cliff, what it do, baby? What's going down, baby?
Man, doing good, doing good. Had another good week. Can't complain, man. How's your week?
Good, man. Good, man. Been very busy, man. Negotiating a lot of transactions, closing transactions, dealing with people that don't know what they're doing when it comes to appraisals and inspectors and property managers. You know, the real estate game, man. How about you, brother? How's everything going with you and the family?
Man, doing good. Like I said, can't complain. Can't complain. Dealing with the same thing, trying to get the rental property. Had my tenant move out, so cleaning it up. I sent you the report. At least part of the game. People trying to give you crazy numbers,
Oh Lord. Oh,
but I got it worked
man.
out.
Cliff, man, yeah, tell them how much your property manager to move a tenant out. Tell them how much your property manager was saying that it costs to get the property rent ready for a new leasing tenant.
So this property is about 1,400 square feet, four
Yeah,
bedroom, two bath.
yeah,
Um, everything's pretty good. It's got some scratches on the walls, some holes in the walls, things like that. They
yeah.
wanted $8,000.
So let me just get Cliff, $8,000 to just after a tenant moves out, right?
Hmm.
And just to get it rent ready, as far as maybe replace the carpet or shampoo the carpet, do a little painting. They're saying it's $8,000.
$8,000 to turn the property.
So what'd you get him down to, Doc? What'd you get him down to, man?
I got them down about three.
Three.
Mhm.
See, guys, you got to understand. You got to know what you're doing, because if you don't, they will screw you over. They were Cliff said it over to me, man. Cliff said it over to me, man. They were saying he needed to replace this and that. Cliff, I'm like, why are you replacing the screens for? The screens look fine. Why are you replacing this? Just paint over it. Like, what's the problem is? Am I right, Cliff?
Man, it didn't make any sense at all. They make their money
Mm-hmm.
from you.
Yes.
So they're gonna put additional things on there that aren't necessary.
Yeah.
Like and the funny thing is, and this is what gets me. I've had this manager for going, I think, about 2 or 3 years now, right?
Yeah.
They're
Yeah.
saying I needed to add things that were never at the house before. It's, it's like, well, that wasn't a problem for 3 years. Why why I gotta add additional items to the property that one the tenant didn't complain about it, you didn't complain about it, but now I
Yeah.
need to add.
And then, guys, I had an issue with an appraiser for a property they're buying in Texas. And guys, we had the property originally appraised so about a month ago, and it came back with like 85K as is, 165 ARV. We put about 30 or 35 into it. Good deal, right? And so we traded bankers because we wanted a better deal. And we had to get a reappraisal, which is fine. It's normal. This new appraiser came out and I sent him over the previous appraisal and the properties that we're using as a standard of how we're going to renovate the properties. This guy came back and said that the property as value was 75,000. We were like, wait, what? And then he said that the after repair value, guys, was 110,000. Do the math. All he did was just add the 35K on top of the as is value that he said it was to come to the 110,000 as the after repair value. Does that seem like quite strange to everybody in the audience? The answer is hell yes. Am I right, Cliff?
Yeah, this got to be. There's something else going on there. Definitely something else going on with that type of appraisal.
I even let Cliff look clever. Cliff was like, "This don't make no sense, Dale. I mean, I don't know what's going on with this one." So we got to reappraise, and we should be getting that back later on today as well. Also, we hoping that we get back the values that we're looking for. So that's good there. But man, Cliff, man, let's dive into everything. What's going on, man? And you know how we can begin it every single time, guys. Cliff, you boots on the ground when it comes to appraisal. What you seeing in the marketplace? What's going down, baby?
Man, I would have to say that my past predictions are accurate.
Mhm.
I was saying that I thought the perfect time to buy is coming up,
Yeah.
and it is. The market is still going sideways, right? So we have
Yes.
that bump from the interest rates. I think I've seen a couple more refinances. We're
Mhm.
not seeing a major bump yet. I think we probably won't see it until next year once they get through with all the cuts, because I think there's another. They're going to cut 2 more times. I think
Yeah.
they're gonna end up cutting. So I called 0.75. They already did 0.5, so I'm already accurate there.
Hmm.
Um, so I think in the marketplace it's going to go sideways. If you want to buy, it's going to be between now and March of next year.
Mm.
If you wait till after March next year into buying season, you're going to go into next year's buying season, which to me starts in April. That's really when you start to see people come out in spring.
Yeah.
In April, you're going to be going to April of next year with interest rates possibly in the 4s. They're already getting to 5 now. I checked today. Dale, it was me and Dale. We keep up with mortgage rates, and we go over. There's a calculator that we go to, and he saw it before. We saw it in the 8s, high 7s. I checked today, and it's at 5.6.
Mm-hmm.
After
Correct.
one cut, they cut 2 more times. You can see 4.75.
Good. You
So
could.
by next year, if they're in the 4s, you're gonna see demand jump. So if you're looking to buy a house between now and March, it's gonna be the best time.
This is where me and Cliff agree in some categories and disagree. I don't think we're going to see an uptick in demand because if it happens, right? I do agree with that. There'll probably be a couple more cuts because they have to.
Mm.
They have to do it. That doesn't mean that we have a healthy economy, guys. They have to, right, to get the money off the sidelines. What I do believe that's not going to happen is the demand won't be going up. The reason because of 2 variables. Number one, people have more in credit card debt than they have in savings. That's a
Yep.
big issue. So DTI is going to be an issue. Then number 2, we got to look at also. Um, I would say inflation is outpacing the wages of individuals, right? And then number 3, a third one, the bonus one, inflation is costing more to live, but they're making the same dollars. So with those 3 metrics, I don't think there'll be a big demand, not because people don't want to, it's because they can't. Them, in my opinion, Cliff, you agree or disagree?
No, I had disagreed with you in the past about that. I'm seeing more evidence to prove that.
Okay.
Is that basically the job market is bad. So you combine a job, so you take those different variables, right?
Mhm.
Prices are more.
Mhm.
The credit cards are inflated, right?
Mhm.
They added more to their credit card,
Mhm.
and then their job is not giving raises at the same rate because the job market is actually falling. So there's no reason to give you a raise, and you can't even go find another job because the job market is so tight.
Mhm.
So that creates what you would say is low demand.
Yeah, the reason why the job demand is not as prevalent as it is because the cost of goods and services when it comes to the producers, right, to do business is significantly higher. So what's happening is corporations are making budgetary cuts. That's why you see all these layoffs. What's going on? You see a lot of bankruptcies going on when it comes to small to medium sized companies. You see what's going on there. So they always look at the fruits of what's going on. Okay, so what's causing this is our inflation. Now, I pray that Cliff is right. I pray, man, that there's an uptick. I pray that there's a demand. I don't see it because of what I see when it comes to the numbers, the fruits of the market. I don't see it now. That may change depending on what's going on the election. You never know when it comes to the market reacting. That may change as well. So we have to see. But me and Cliff been going back and forth on this for a long period of time, right, Cliff?
Oh yeah, yeah. I mean,
Yeah.
I think there's multiple ways to be able to see it, and then real estate's local, so you're gonna see it different in different parts of the country.
Correct. It's all good, baby. But Cliff, man, let's dive into this real fast, man. Yo, let me begin by saying this. This is not a political show at all. But me and Cliff get inundated with a lot of questions from a lot of individuals concerning the political leanings or things that's going on, how it's going to affect the private equities, the securities market,
We're talking money,
and as well as real estate investors. So these are monetary policies.
right?
So we have to attack these. So this week we're going to look at Kamala Harris's tax policies. Next week we'll look at Donald Trump's. Okay. So this week is Kamala Harris's, guys, and we got to bring in guys from Valuetainment, and they broke this down, her policies down to a T. It was scary at how they broke it down. It was so good. But then what we'll do is we'll listen to that information, and then we'll sit down and reason together of what we think are the pros and the cons and the effects it may have on the market. Sound good, Cliff?
Yeah, let's do it.
Let's get it in, man. Here we go, man. Let's see what's going down. Here we go, y'all. Let's go.
Kamala's tax plan. I did a video. We talked about it on Valuetainment as well as on Twitter. But Rob, here's what I want to do. On Kamala's new tax plan, Tax Foundation broke the whole thing down to say exactly how much it's going to be costing you and where they're getting the money from, okay? And how much revenue they're going to get the money from. So you hear about the unrealized capital gains, Vinny. We've heard about the fact that above $100 million, 25% potentially unrealized. So these guys did the analysis and they broke down for every single policy in her tax plan how much money they will collect. Go all the way to the top right. No, not you, Rob. Audience watching this. You see where it says 25 to 2034? That's how much money that's going to collect from us during 10-year period. And if you go to the top left, it says individual revenue raisers. There's 3 categories to it. I'm going to go through every one of these, and you guys ought to be able to share this with your peers, friends, family who are voting whatever way and say, are you okay with this? So let's go through it. They want to raise the top tax rate to individuals' income to 39.6. That's going to generate them $170.5 billion the next 10 years from
Stop right there, Cliff. They want to raise the top tax rate on individual income to 39.6%. Shit. Let's keep going.
Individual income earners. Okay. Next one, tax unrealized capital gains at death over $5 million and impose a 28% tax rate on capital gains over $1 million. That's going to give them another $172 billion. Look at the next one. Expand the net investment income tax base to active pass-through income. That's going to give them $258 billion. Raise the net investment income from 3.8 to 5%, another $125 billion. Raise the additional Medicare from 0.9 to 2.1. By the way, no one's going to pay taxes. It's only the rich. That's everybody.
Yeah,
that's
Medicare is everyone.
That's everybody. Look at how much that raises. From you, the average person making 60 grand a year, you're going to be paying for this. $258 billion the next 10 years. Make permanent the limit on excess business losses for pass-through limits. $21 billion. Limit 1031 like exchange to $500,000 in gains, which, by the way, you want to explain what that is?
That basically means the 1031 exchange is where you sell one house and buy another.
Roll the money over.
Roll the money over.
Yeah.
That will impact your mom and dad. If they sold their house for $700 grand in New Jersey and moved to Florida, they're going to get hit.
That's right. Por mi look movie.
Yeah,
1031. So that's another $20 billion. Tax.
Cliff, 1031 exchange, man. That's really big when it comes to investors. That type of policy there. Forget the other ones for right now. 1031 exchange. Talk about that.
Man, what are they doing? I mean, the 1031. Why are you messing with that? Because they want to tax that. The problem is that you want to build more homes. That's what
Correct.
everybody's goal is. We have more
Yes.
inventory, we can bring down costs, and everybody gets housing, right?
Mhm.
Then if that's what you want, you don't get rid of the 1031. The 1031 literally is incentivizing you to build, to buy
Yes.
another property, to
Yes.
put your money someplace else in the real estate market.
Correct.
If you have to pay, if you don't get the 1031, then they'll just sell it.
Yes.
There's no need to carry over and buy. Now, I'll just take the cash, and instead of reinvesting, I can put it on the side and invest in something else besides real estate. So that doesn't make any sense.
But also, if you do that when it comes to the 1031 exchange, you're forcing the investors, as you just said, to have to sell the property. Now you go into the capital gains. We just heard them talking about raising the capital gains tax as well also. So you're disincentivizing the 1031 exchange, right? And then you're incentivizing for them to have to flip it for capital gains. So that either way you go, you're getting them either with 1031 exchange or the capital gains taxes. How is that attractive to any investor, Cliff?
It's not. It's not. Now, what you've done is whenever we have to do a analysis on a property, we're having to factor these things into it
Correct.
for the investors, for everybody involved, and now these additional costs make it harder for us to do business. It's already difficult to do business. We were talking before about how hard it is to do development. Right
Yes.
now, it's just it's a tough market,
Yeah.
and this ain't helping.
It's not at all, guys. Guys, she's not done. She's not done. The first portion of it was just individual. Let's keep going. Now we're going to go over to the corporate side. We're going to finish the individual. Then we'll go to the corporate side. All right, guys. Remember, we're talking about money. Money, money, money. All right? Here we go. Let's get it in.
Carried interest on ordinary income, $7 billion. Create new limitations on high-income taxpayers for large retirement accounts. That's so ridiculous. Hey, you should retire for the future so you don't rely on the government. Yeah, I did the right thing, so I don't have to come to you for money. Let's tax you. 60.
So if you do a good job at retiring, right? And it really depends on the plan, right? They try to tax you on your retirement money too.
Oh yeah.
Let's keep going, y'all.
$4 billion.
You save too much. We're coming after you.
Next one here. Required distribution and miscellaneous tax. So that one, $94 billion. Tighten estate and gift tax rules, $94 billion. Miscellaneous, $21 billion. Just for the individual, Vinny, the next 10 years, they're going to raise $1.21 trillion. Now let's go to the next one.
That was all individual taxes, guys. We haven't got to the corporate side. Now it's going to go to the corporate side. That's all individual taxes. That means you as an individual. Let's keep going.
Which is corporate revenue raisers. Raise corporate tax rate to 28%. How much money does that give them? $882 billion. Let me tell you what happens when they do this. When I want to give a raise or invest back into the business, we step back because when we sit down and talk to our accountants regularly, I had a 1-hour call with them yesterday because an audit is taking place and it's the government's trying to see what happened with our business. And all of a sudden, I don't know what special requesting they're asking about that they're doing right now, which my accountant said the following. I've been doing this for 30 years. I've never seen this. I don't know why they're going through it's not an audit. They're just kind of going through something unique. This is a big accounting firm that we're.
So right now, Patrick and his squad right now, Cliff, they are going through not an audit. The IRS is asking questions, just asking some questions, and the accounting firm say, we have never seen this before in our lives.
What?
Just asking questions.
That doesn't make any sense.
Just asking questions. It's not audit. Not based on what we're saying, based on what Patrick and his accounting team is saying. There ain't no audit. It's just they asking questions.
Then why would I send them documents or send them anything if it's not a
I don't know what they sent them. If they sent them anything at all, I can neither confirm nor deny that at all. All Patrick said is they're asking questions. It's not audit.
The problem is that if especially someone who's got money like him, he's got an accounting firm, probably the best in Florida. The teams are going to make sure that everything's done correctly.
Yep.
I mean, I don't know what what I don't understand too is if the IRS is auditing somebody or even looking into somebody who uses a top tier accounting firm, they know what they're getting into.
They don't care. They don't care. That's why they ask them questions. An audit is going to force them to spend resources that they may not want to spend. And a company like Patrick's companies, he can put down 2, 3, 4 million and he won't feel it. And say, just take me to court. Just go to court. And he's fine with that.
And like you said, he's got the best accounting firm, which I guarantee you. So when this is the issue that you find with all these taxes and everything that you're seeing, when you start getting people with 10, 20, 30, 40, however many millions of dollars,
Yeah,
they hire top tier accounting firms.
correct.
Now, what makes them top tier? I would say it's two components. One, they have some of the best lawyers you can find in order to go to court. So they have very good tax attorneys. But number two, they have people on their staff who either wrote some of the IRS verbiage in the law or were IRS they worked for the IRS themselves.
Yes.
They know it. They work for the IRS. They know what the system is. When you have those two things working for you, you're not really going to get them on too much. They know the rules. They know how to get away with all the tax cuts they need. It's hard to get them on anything.
Here we go.
Dog. Come on, man.
All these questions, bro. We're not done, y'all. We're not done. Let's get into it. We're not done. Let's keep going. Let's keep going, guys. Let's dive into more of this stuff. Again, this is Kamala Harris's tax plan. Here we go.
We're going through this. So they're going to take that money and they're going to say, hey, instead of giving that money to you to invest into your business, give it to us, the U.S. government, 882. Raise corporate alternative minimum tax from 15% to 21%, another $346 billion. 21% What happened, Tom?
No, I was
Tom, I'm going to get there. We got plenty of time. I don't need signs for me to follow stuff through. 21% GILTI, minimum tax rate and other GLTI changes, $278 billion. Repeat FD, $92 billion. Section 265 change, $187 billion. 4% excise tax on stock buybacks. Okay, $79 billion. Modification to $162 million limit on deduction of excessive employee remuneration. They didn't write it right. $265 billion. Miscellaneous, 34. Look how much money they're going to collect from corporations over the next 10 years. $2.166 trillion. But they're not done yet. Go to the next one.
Wow.
Individual revenue raisers impose a 25% minimum tax on unrealized gains on $100 million plus. They're planning on collecting $500 billion the next 10 years from people that have $100 million net worth. Levy on under-tax profits rule on large multinational firms, 225. Changes to tax compliance and administration, 24. Other revenue changes, 766. Look at the number right there. You see it? Rob, can you highlight it so people can see the total? Just type in the total gross revenue right there. $4.143 trillion of money is going to go from the people, us, to the government the next 10 years, which let me unpack what this means. So in other words, there is a guy that visited the States the last week. His name is Vladimir Zelensky. Who that money that they're getting from you and I, hardworking people, let's give him a few $100 billion, $50 billion, $100 billion, $200 billion. Let's give everybody else the money and let's take that money away from you. Let's take the money away from a guy named Elon Musk who spends it to reinvest it into his business. No, we think the U.S. government can do a better job than you. You pay up here, you give us the money. And then, Tom, if you want to break down what you were showing me there, how that impacts the regular person, what that means there.
No, I wasn't trying to interrupt you, but when you tax all that money on businesses, two things happen. It's going to create inflation effect because the businesses are trying to make profits. And the other thing that happens, if the business makes less profit, your 401k and your IRA are going to lose value. So the 401k that most people have through their businesses, not through a business, they work for a business, they have a 401k, they're going to see the value of that 401k shift. So all of this taxing also has another hidden tax on the value of IRAs and 401ks. Those are going to go down, meaning you have less money there for that monthly allowance that goes along with Social Security that you're supposed to live on in retirement.
Tom, let's just say this policy goes through.
So, Cliff, hold on, Cliff.
Brother, what's that? What's that, brother?
Oh my God. And Tom's finna go in a second concerning what's going to really happen. Cliff, that's a lot of information, man. What's your thoughts real fast?
I mean, it's just a lot of taxes. A lot of taxes. So, I mean, I would say the simplest way to Dale's kind of, I guess his camera's not working right now, but the simplest way to view this is if you look at it, pound for pound on the dollar, right? So you have an example with Elon Musk, who built Starlink, SpaceX, and Tesla. Now, he did a lot of that with the money he got from PayPal, which was $185 billion. So the question becomes, if you would have given $185 billion to the government, could they have started those type of companies and had those type of success with those companies to be able to start global internet, rockets, that can go up to the space station, or any other type of investment? The answer is no. They can't do that. It's not possible. So that's why it's not necessarily a great plan unless you have that dollar, every dollar you have attributed for that's going to actually grow the economy and something else that we can actually help with. So yeah, I see Tito out there, man. You own nothing and you'll be happy. Yeah, I've heard that before. I know. That's the plan, right? Because they want most of your tax dollars to be able to flow up to the government, which can do some good things. It depends on what you're trying to do. But for the most part, they're not going to be as efficient in trying to be able to produce the outcomes that they say they can. It's just the dollar is just not as efficient, right? I mean, it's you probably have waste of 70 to 80% on the dollar. So 80% of your dollar is just going to waste. Bureaucracy, paying for things that we don't need to do, while 20 cents on the dollar is actually going towards the thing that we have. So, but look, I'm still waiting on Dale. Dale, you still there? We still having issues.
Yeah, can you hear me? Can you hear me well?
Yeah, we got you audio, but your video's out, dog.
Yeah, I don't know.
There we go. Well, we got him back. We got him back. Okay, there we is.
Hold on, y'all. Let's see if I can get it right. Hold on. One second. Hold on, y'all. Hold on. This is just y'all. I don't know what happened. It just said nope.
Hey, this is letting y'all know it's live right now. We got technical issues that come up, so it's
nope.
part of what we do.
That thing said no, sir. I was like, damn. Okay.
Well, yeah, go ahead. So play the video. Play the rest of the video while you're getting everything.
There we go.
Okay,
we're back. We back. Woo! Yeah, I don't know what happened, y'all, but hey, we back. It's all good. But let's keep it going real fast, y'all. My bad. It is what it is. Let's get it in. Let's keep going though.
Okay. Can you paint a picture? We do business together for a long time, nearly 20 years our relationship, and we've been doing business together for a little over a decade, I want to say now, right? Yeah, we're over a decade of doing business together. And business, 15 years, we've done stuff, advisory role. But business day to day, almost a decade, over a decade. Say Kamala's elected. What are some of the next 3, 5, 7 things you and I and our board, leadership, what are some of the next 5, 7 moves we would be doing if this were to take place?
Well, we would be looking at how much profit we have, because we always reinvest back in tomorrow's products. We always reinvest in things. The reason Minnect is here is because Vault did well and Valuetainment Media did well. So suddenly we're going to look at, okay, how much profit do we really have at the end of the year to reinvest in these new products? We'd be looking at that. How many new job openings are there really going to have so we could hire people to maybe make these other products and to run the Vault conference and stuff? It's going to have an impact on jobs and our ability to expand and grow. And that has a negative impact on people that are like, that's a great company. I'd like to go work there. I'd like to be a part of that. There's going to be less opportunity. We're going to be looking at all of that stuff. And we're going to be looking at how much raise can we afford to do it? Because we're not public on the stock market right now. We're a private company that's trying to reinvest and build and build and build on our future vision. It's going to severely impact us. And what she's doing, they are going after to create a dependent America on government.
There we go.
In line with their globalist agenda. It's that simple. People say, why are they doing this? Why are they doing this? They want us to be dependent on them. And then they want to push their globalist agenda. But that's what happens to companies. We can't expand. We can't add jobs. We can't invest in new products. That's what happens to us.
I hope everybody that's listening to this and watching this, is Rob going to put a link? I want them to send this to their Democrat, liberal, brainwashed idiot friends and let them know what the hell these people are trying to do.
Let's put the link below on Tax Foundation.
That, because you doing that and showing me that is unbelievable. Number one. Number two, we all know Kamala's not making this plan. Who is the person? Who are the people, PBD, behind that shitty ass plan that's going to destroy our country? That's what I'm curious about.
Well, I mean, this is what you have to think about. So for us, like, I don't have any hate towards Kamala. I don't know Kamala. How can you hate somebody that you don't know? Okay. I don't know who this person is. I don't know what she does. I don't know her going.
Okay, now he's going to go on about his opinion on how he doesn't hate it, which is fine, and I share that sentiment with him, which is fine, and I know that Cliff does as well. It's just, guys, here is what Cliff. What are your thoughts, man, concerning this, man, real quickly, brother, and then I give you my thoughts. What are your thoughts concerning this whole thing?
I think they have a lot of projects they want to get done. They think that, well, I mean, why not? If you're the president of the United States or a senator or something along those lines, and you have trillions of dollars at your disposal, you can sign a pen and things just happen. Yeah. Because that's how it is with a CEO, right? Yeah. CEOs just sign pieces of paper and then things just happen.
Correct.
No, that's how they expect things to go in government a lot of times. They think we passed a bill. We're going to do all these things. That's not how it works. People have to get to work.
Correct.
And they have to build those things and actually come up with those things. They need guidance and they need feedback because sometimes the legislation is not always clear.
Yeah.
So what I think is they have more vision than they do actual production, which you got to have both. You got to have both.
It sounds like what you're saying is a lot of their stuff is theory based, not real world based, right?
Right.
That's the worst place to be in, guys. Here, another question. So, is this a good tax plan or is it a crappy tax plan?
I mean, it depends what you want. You want a bigger government? Yes. It's doing what it's supposed to.
I agree with that, Cliff. If you want a bigger government, guys, you're going to love this. But I would say this here is, I don't know about you, Cliff. I know how to spend my money better than the government does, correct?
Yeah.
So if that is the case, how could you actually really want a bigger government? Unless you are saying that you suck at spending your own money and you believe that the government has a better chance, a better money management plan than you do. If that is the case, you need prayer. Bad.
Well, they're trying to figure out a way to funnel the money down.
Theory. It's again, we're back in the theory. We're back in the theory realm because of the fact that, and I'm going to take one of the principles. You want to tax unrealized gains at 25%, right? And that's impossible. Now, watch this, guys. Who was it? But Patrick actually did another video. It was more professionally done. That one was live, but he did a more professionally done, which is fine. He talked about how much it would cost for, let's say, Jeff Bezos. I'm sorry, Elon Musk. I believe that his tax bill at a 25% unrealized gains would be, I believe it was like $22 billion. He had to literally cut out a check. Now, he didn't have $22 billion sitting in the bank. He's $22 billion plus on the balance sheet, right? Right?
Yeah.
So therefore, it's impossible. So he would have to lay off workers, right? And sell a portion or liquidate his company to pay the tax bill. Well, that sucks for the average worker because of the fact that, number one, your retirement is invested in what? His companies.
So it's the United States, so are pension funds.
Exactly. Right. So those pension funds are invested in the stock market, which is companies, which the government is forcing to have to liquidate to pay this 25% unrealized gains tax. Literally. That sucks for you, which means your retirement is gone. You have devalued your whole retirement is gone. It's cut in half. You're bad. This numbers. I don't know about you, Cliff. If we have a house or an apartment complex and a tax bill comes in on 25% on unrealized gain, and I don't have the cash in the bank to actually write the check to the government, what am I forced to do?
So, yeah, it makes no sense because, and you have to understand too, in these large companies, even on Elon Musk is a good example, Jeff Bezos, you think that they're like, oh, well, they own the company. No, what they probably own is probably 15, maybe 20%.
Correct.
Right? So if they're forced to sell their equity, they may not even own the majority shares anymore. So they don't own their own company. You force somebody to give up ownership of their own company.
Correct.
So what would happen to that? You already know that you would have, a takeovers, corporate takeovers. As soon as they have to pay that tax, somebody else will come in and take advantage of that. Now, I have heard this.
Go ahead. Mm-hmm.
One more point. You probably haven't heard this. I said this is genius. Goldman Sachs said we got a solution for you if this passes.
Holla at me.
They will loan you the money to pay the taxes based on your equity.
Yes, sir.
So they can make revenue on that payment.
Talk to your partner. Yes, sir. Now we to the counter move, guys.
Right.
Now we're here. We talked about how crappy this plan is because it's crappy. And I know people are going to say, well, it's not going to affect the average American. BS. If you are taxing 25% of unrealized gains, and I'm going to just say Tesla, Apple, right? Are unrealized gains of those companies, right? And let's say, for instance, those Elon Musk didn't have the cash in the bank, right? He would have to either do one or two things. He would have to liquidate a portion of said company, which is going to affect. He's going to have to lay off people, right? Because he has to decrease his bottom line. So your job is gone. Number two, he's going to have to liquidate his assets. One of the assets, why? Because he has to write a check to the government, right, for 25% of said value of said property, which means now your retirement, it is gone now. It's out. Holla at your partner, because the company's gone. He sold it. It's out. You out. So it does affect the average American because their retirement money is invested in said companies.
Right.
This is simple. It's not hard. This is the dumbest plan ever. Now, the counter move is this here. I love Goldman Sachs for that type of counter move. But now you know what they will probably end up doing, right? This was done before by Apple. I believe Apple is worth anywhere near $1 trillion. I may be wrong on the valuation. It's around there, $1 trillion. And let's just say, for instance, Cliff, hypothetically, right? I'm gonna get my little calculator out real fast, guys, real quickly. All right. So $1 trillion, right? Make sure I got all these. That's a lot of zeros. There we go. $1 trillion times 25%. That's $250 billion. Good God. $250 billion, which is fine. Now, this is what they may end up doing, guys, which makes sense. They go to Goldman Sachs. I need a loan for $250 billion. Goldman Sachs said, we go give it to you because your name is Apple. Now let's negotiate. Now we have the cash we have half of the cash in the bank, but we won't keep our cash in the bank, right? But we'll give you a warrant of some sort, a debt structure with a warrant, so that we actually pay your money back. They said, cool, we rocking with you, no problem with it at all. Now the rate on that debt is going to be 2%. 3%, because we don't want to pay. We don't want to pay what the market's paying, right? Because we're Apple. we're Apple. So Cliff, how much interest rate would a Goldman Sachs charge a Apple for on $250 billion?
It's probably going to be 3 to 5%.
3 to 5, easy. I'll say even 2%. It's Apple.
They could cut. Yeah, they could cut a deal. They could cut a deal all day because it's basically free money. It's free money
because they got the cash. They got the cash, so they take the debt, give the government their money. They're good, no problem with it at all. It just so happens that Apple maybe sells an asset or something that off balance sheet asset or something like that for $250 million, and now they got the money back to pay back the loan, or they keep the loan on their long term. Why? It's a write-off. It's a write-off. Because remember, it's unrealized gains. So let me start over. Instead of cutting the check out to the government, they just get the debt and say, okay, government, here's your tax bill, here's our debt. It's a write-off for us.
So yeah. And you got me thinking too. So if you're doing unrealized gain, what do you do about a equity positive asset, but a negative cash flow asset? I'll give you an example.
Okay.
Some NBA teams
Yeah.
The value of the property, the value of the team went up.
Yeah.
But the actual cash flow went down.
Yes.
Like the Cavaliers. When
Yes.
LeBron left, the value was still okay, but the cash flow dropped. So you're supposed to pay for an equity that went up or stayed the same, while the money you're bringing in every day is down.
Now, Cliff, what they'll do is it's going to be a paper loss. It's going to be a paper loss of what it's going to be. In other words, if the tax bill for Apple is $250 billion, the government's like, hey, we got to get this taxes here. Well, they're the best CPAs on the planet.
Oh yeah, yeah.
They're an army of CPAs, right? Accountants. They will find a paper loss easily, and that'll be wiped out. Gone. No money at all. They'll just get the money from Goldman Sachs just because they can.
And that's the problem trying to tax all these guys. There's too many tricks.
Yes.
And they know the game. They have people on their staff who wrote the playbook.
Thank you. Guys, these guys are paid lobbyists to write the laws. You think that these politicians are going to go against the ones that's cutting the checks to them? Get out of here. For real? If you believe that, man, I got some swamp land down in Louisiana. Call my dude Mitch. It's my dude from New Orleans. You know what I'm talking about? Call my dude Mitch. He'll be my agent. We got some swamp land. It's going to be good for you now, right? It'll be good for you. You're going to lose money every single month, but it's going to be a great return on investment. Great. Do you see how dumb that sounds? That's how dumb this plan sounds. It's dumb. This is the dumbest plan. And Cliff, another thing, is this an environment for investors that are going to want to invest in the American ingenuity?
No. So what you're getting, think about it. You're getting hit to make more money. And I don't mean money in terms of like cash dollars. I mean equity. So literally you want to buy the S&P, you want to buy a stock, whatever you want to do. Every time it goes up, you got to think, great, the stock went up, I owe more taxes.
Correct.
Why would you want that? You want people investing. You want that money that's going to these businesses to buy and to grow, create more assets, to create more products, create more services. That's more jobs. That's more money that's flowing. The way that the economy works is transactions. You want the number of transactions to go up.
Correct.
That's how you have growth. Correct.
And yes, Mitch, I see you on Instagram. You are correct that the retirement money does not go away on M&As, mergers and acquisitions. I'm talking about the value. The dollar value goes down. It goes down because a sale has happened. It was forced to happen. Therefore, it's unattractive for new money to be invested in said sale or acquisition. Am I right, Cliff? Am I wrong?
That's smart. You know what? I would actually do the opposite. I almost think almost everything she's doing would be the opposite, would be better. Think about this. Instead of taking 1031 and knocking it down for real estate, expand it. Expand a 1031 to businesses to where you can do the same thing and roll from one business to another. Now you're incentivizing businesses to grow.
Ooh, so what you're saying is expand. Oh, that's a good idea. Expand the tax code to when it comes to 1031 exchange, and it may be something in the tax code that's already there. I don't know. For business to be able to roll those in to the first man, if you did that, Cliff, oh my God, that is 1031 exchange on steroids.
Right. You're incentivizing growth. You're going to get huge growth because then you could sell, take that money like Elon did. Instead of having to pay taxes, you could roll into the next business. And so where the government would get most of their tax revenue is off the transactions that are being produced from those businesses. Correct. So sales taxes would go up.
Correct. Again, guys, today we are talking about Kamala Harris's platform, her tax policy. We went through it and you heard real live investors, the valuetainment team and me and Cliff talk about this tax thing. All right. Her tax policy. It doesn't make any sense. And number two, it is not attractive to investment dollars. I would not put my money in nowhere. I guarantee you, if she wins and this is passed, you're going to see a mass exodus of investment dollars leave America. They're gone. You agree, Cliff, or you disagree?
I think you're going to see different strategies.
Okay.
Especially about the people at the top. I mean, if you're getting taxed on equity, which I don't think will pass, but we're going to see, right?
Yeah.
If I think you're going to see, I think you're going to see more offshore, like what you said. I think you're going to see more offshoring of capital.
I agree with that. Yes.
And more offshoring of what they're going to do is have a foreign entity own the equity. So that it doesn't get taxed in terms of America, it gets taxed in terms of whatever country they're working in. You're gonna see a lot of Caribbean there's a lot of Caribbean companies pop up.
A new bank here. There's gonna be a lot of investment in that space, a whole bunch of investment in that space. But I agree. You can have both. You can have an export of capital to the Caribbean, but also new strategies that come up. I like the 1031 exchange strategy. I like that a lot. I like that a lot. I really do. Man, that's a good ass idea. Oh my God, that's a good one, Cliff. That's a good one, guys. It's a good one, guys. Well, guys, man, give us 1 second. We'll be right back, guys. We got to play something for you. Here we go. Most individuals that I've talked to today, they're really concerned about the economy, specifically the volatility of it. Number one, they're really concerned about inflation. Now, the area of their concerns really centers around the variable of inflation. Inflation right now is really outpacing people's wages, number one. And number two, it's beginning to affect their 401k and IRAs because their retirement accounts are connected or intertwined with the stock market. Over the years, I've been fairly successful in real estate investing. Currently, I own about $35 million worth of real estate under management. And also my partner and I have been able to build our private equity and venture capital firm to about $1.2 billion worth of assets under management. Now, this success has taken place in up or down economies. Now, whenever there's volatility in the market, opportunities begin to show up. There are 3 investment strategies that, if implemented the correct way, any investor can go from 0 to 6 figures in the next 6 to 12 months. Click on the link below or swipe up and let's talk through these strategies. All right, guys, we're back, and I love going back and forth when it comes to all the platforms, guys. When I'm talking about capital gains, guys, there's a line in her tax bill speaking about capital gains. I'm not talking about when it comes to unrealized gains. Those are 2 different categories in her tax plan. All right, so we're talking exclusively about unrealized gains in that segment we were talking about. But in the video, Patrick's team actually walked through the section talking about capital gains as well, also. So it's real simple, guys. Just look it up, the Valuetainment team, and they go through that line by line. You can agree, disagree. It is what it is, Cliff. Man, Cliff, you want to say anything, man, before we get done, guys?
Man, you already know. You're always one deal away from changing your situation. Man, hit us up. Get the free ebook, man. Learn something. You'll be amazed how much you can go once you do their first one. Especially you have somebody walking you through it who can look at it. Who's seen, walked literally thousands of houses.
Yeah.
So seen everything, man. And so you get someone's eyes on it who's walked through it and been part of the process. But man, just take steps, take action, man, and enjoy your weekend.
That's good, guys. He's correct. Right on. Also, guys, hey, we've been doing this a lot of other platforms, which is fine. And we've had a significant amount of asking for this. Cliff and I always ask, can he and I train people to invest in real estate? The answer is always yes, we can. But we kind of decided there was probably a better way to train individuals when it comes to real estate. And so we thought it'd be wise for us to teach you how to locate and stress the property in your city, vet the numbers, make sure that it's a good deal, structure it the right way. And if it makes sense, we'll fund the deal for you, right? And we can profit share. For that to happen, we have to get you the information that you actually need. We're giving away a free ebook. It's completely free, guys. It don't cost you no money at all. We don't want your money. We want to get you this information, guys. And we actually walk through a technique for you to actually locate a distressed property in your town for free. You get a list of those for free. It's in this ebook, guys. It's free. It doesn't cost you a dime. Scan on the QR code here on the screen, or if you're on any other platform, just go to the description below. Click on the link, right, and it's right there. You can download it right there. It's free. It doesn't cost you a dime at all. If you're on Instagram or TikTok, guys, go to the link in my bio. It's right there, guys. Click on it and it's a free ebook. It's simple. Or you are welcome to, if you're on Instagram or TikTok, DM me the word real estate, and our team will get this link out to you for you to download it. It's 100% free, and it costs you any money at all. We don't want your money. We want to get you the information so that you can actually go out and begin investing in real estate successfully, right? And if you need the cash, if you don't have the cash, we got you. If you don't have the experience, we got you. If you don't have the wise counsel, we got you. Just we want to make sure that you know how to locate the right deal. That makes it, Cliff. You want to say anything, Cliff?
Nah, man, I already said my piece, man. So just hit us up.
Good stuff, guys. And lastly, man, guys, everybody wants to always talk to Cliff about appraising. Simple, guys. Go to hunterappraisal.com, hunterappraisal.com. Schedule down, talk to Cliff, man, about your transaction. He'll walk you through the whole process. Cliff, tell him about what's going on, but big dog.
Yeah, so go to hunterappraisal.com. You can go visit the website. It has all the different types of appraisals that we do: residential, farms, land. I'm actually starting to expand into commercial. So we actually have another company that we're partnering with that we're going to expand into that doing pretty soon. So you have your multifamily and really trying to get into luxury residential and storage facilities. So go to the website. You got any questions? You need an appraisal yourself? Go to the website, fill out the form, and we'll be back in contact with you.
Yes, sir. Yes, sir, guys. Again, hunterappraisal.com, guys. Well, guys, that's it, guys. Thank you so much for your time. We pray that this was informative and you learned something, guys. But you know how we end it every single time, guys. Before you leave, and while you can, you see that thing, baby, take that damn picture and give it to your mom and them, holler at your partner. God bless you, guys. See you next week, guys. Peace.
Bless God, give thanks. Bless God, give thanks.